this. Audio input. Sorry, okay. Hold on a second. Can you hear me? Testing. Yeah. Okay, good. Good morning. Good morning. To relocate again. The joys of digital nomad life. Okay, let me just share my link. Otherwise, no one's going to find out what's going on. No problem. David, are you there? What does it say? The audio stream's current bit rate is lower than the recommended one. Do I need to do that again? Let me try that again. Hold on. It's better. Does this sound alright? I just plugged in this microphone after I started the stream. BTC is falling a bunch. Perfect. Almost done. Let me share this link. And I'm going to begin analyzing the charts. Great. Okay. Let me turn that light off. A second. All right, I'm ready. It's better. So, let's begin with Bitcoin. Good morning. Let's have a look. So, we had a big sell-off yesterday. That was potentially, you could say it was expected. I didn't take the short. I wasn't really interested in local short. It would have been really a really good trade. I said you could take the short. I wasn't looking for it, but it would have been a good trade on that swing failure. And then, so basically I was looking for higher or I was looking for lower. And effectively, when you're looking at my trade ideas from yesterday, I had this daily level in mind. See that? So I didn't take the short as we lost this weekly level and this previous bull market high, all-time high. Good morning, Hyan. Yeah, well, I'm gonna have a good slurp. I'll do it after this. So I wasn't looking for a short as we lost that weekly, because it's a weekly and sometimes it does that. I was actually looking to short the loss of the daily, so that's why I had my entry down here with an invalidation back there. So I was looking for some kind of resistance, and you just can't see it. There's no resistance. As the price came back, it came back up, and actually it found support. Okay, and I said that that was actually very bullish pattern, hence the long. So I took a long. So I took a long as it came back up, and my invalidation was underneath this low here. So let me hide the short now. So as I saw the price come underneath it, I just waited. Once this cluster of market structure had been formed, and as the price came back, and actually as it came back above this yellow line, that was what I was interested in, like a failed auction, but with the price coming back above this previous pivot low here. Then I took the long, and I put my invalidation underneath these lows, and I've taken profit now. I've taken my 1%. So it moved enough for me to risk 1% and take 1% in this trade. And as you can see, the price is pulling back, but that's why you take your profit. You take your profit because now I'm sitting in a long. It's not my full position. It's a runner, but I can always re-add. I can recompound my 1% if I get an invalidation. I'm looking for an invalidation. Always looking for an invalidation when I'm taking a trade. So this price action gave me an invalidation, and look, it's kind of done what I wanted, and therefore I took the trade, and that was a successful trade. I only took one trade yesterday. Oh, actually, I tell a lie, I took another trade. I'll go into that in a second. What did I want to show you? And then I just did I post it? I don't think I posted it. Right, never mind. That's fine. So that was quite a good plan. I don't know if anyone took that, but it was there. So that was my trading idea from yesterday. And now what I'm looking at, the local price action, I'm seeing that we're in some sort of megaphone pattern. So a megaphone pattern is higher highs and lower lows. We've come in to make our lower low now, and now we're heading up to potentially make a higher high. Let me just pull up a megaphone for us all so we can familiarize ourselves with the megaphone pattern. So there's a bullish megaphone and then there's a bearish megaphone. I'm going to copy two images for us to see. This is the megaphone pattern. And then I'll pull an example that looks quite pertinent to this price action, so we get an idea of what we're looking for. I just need a good image though, that's the problem. A lot of these images are very small. Give me a second, if I find something decent. It's amazing how rubbish the content is sometimes on the markets. Right, I found a relatively decent image. I had to search for a lot. So this is the idea. So a bullish megaphone, you come into the megaphone, you bounce, you make a lower low, you make a higher high, you make a lower low, you make the higher high, but the higher high extends, back test the trend line of the megaphone, and then off we go. So it's a bit of a continuation, a bullish continuation pattern when the price comes in from the lows, and in reverse, if the price comes in from the highs, you make a lower low, you make a higher high, low low, higher high, you break the bottom, you back test the trend line that's broken, and it's a continuation. Basically, it's a continuation pattern based on the direction of traffic, based on where the price comes in. So based on this idea, we're looking at a bullish megaphone, and you see what I'm looking at now. You've got the price coming in from the lows. Maybe that's the, I mean, this is just an example. It doesn't necessarily have to be exactly like this, but it does look like we're forming some kind of megaphone at the moment. There is also something else you can get from this, and I just want to share it. So there's two things you can get from a megaphone. It doesn't have to be a megaphone, and I'm going to explain that to you now. So this is the beginning of something that could be forming, but there's also something else that can be forming, and I'll explain that to you now. Good morning, War Child. So this is a megaphone pattern in a real life price action, and you can see clearly that you can actually hit the top line once, twice, 3 times, more than just twice, according to this. You see it hits the bottom trend line once, twice, 3 times, 4 times, 5 times, 6 times before it actually breaks out. What's important for the continuation is you can kind of see it here, a little bit of volume and a back test. Okay, and then you'll just get a breakout to the top, to the upside, because that just confirms this whole structure of support, and then longs start to enter. So that is the idea of a megaphone. And so the only thing you have to be careful with a megaphone is it could also become a diamond. Okay, so we have that kind of potential here, and a diamond, that would be your pivot. This would be your pivot, and you could potentially form, if now we start making lower highs and higher lows, then actually we're in a diamond, not a megaphone, a diamond. And a diamond in the context of where we are is bearish. So let me pull up a diamond pattern now. Pattern trading. I'll show you the pattern first. So again, it depends on how you enter the pattern. If you come in from the lows, you're exiting back at the lows. If you come in from the highs, you're exiting back to the highs. Eventually, once you put in your mid pivot, then up to that point, you're making higher highs and lower lows. And then after that point, you're making higher lows and lower highs. And a diamond pattern is a reversal pattern. It's not a continuation pattern. So a megaphone is a continuation pattern. A diamond pattern is a reversal pattern. And right now, we don't know what we have. We're not sure. It's you can't tell because we've only just put in our midpoint. Okay, we'll know as we approach the highs here to see whether we make a lower high or whether we go up to squeeze. Okay, if we go up to squeeze, then we're probably looking at a megaphone. So that's a diamond pattern. And then let me show you what it could look like in price action, in real life price action, just so that you understand what it could look like. Something like that. This is on a GBP USD, but you see it can, you're basically making higher lows, higher highs, low lows. This isn't great because this is a higher time frame, so we're not looking at a higher time frame. Like I said, it's not what I can find online isn't great. Let me see this one. There's lots of examples of how to trade these patterns. Okay. And I'll tell you the best way, in my opinion. So we're potentially looking at two patterns here. We're potentially looking at a megaphone, and also we're potentially looking at a diamond. Now that you can see it, I'm going to delete the triangle. And zoom in a little bit. And then what you want to see now is whether we put in a lower high or not. Okay. It would be nice to get as high as possible before we put it in. Like I think right now, it's a bit low. And also if we are making a megaphone, we have to make a higher high now, basically. We have to make a higher high and squeeze those highs. It's not the best looking megaphone because we have these points. This one kind of is off. I'd kind of ignore that one. And then this one is off as well. So I almost would ignore that one as well. And if I draw it a little bit more megaphony, to ignore those and just use trend lines, then probably this to there. And then probably this one to here. Maybe something like that. That's kind of more of a megaphone with a fake out to the downside. And effectively, if you form a diamond, if this is the pivot, then this would be here. And so actually it's a little bit more sharper because that would be your pivot. You kind of have to ignore that. So I actually prefer megaphone to diamond right now. But anything could happen. And what you could actually get is if you get a swing failure up there, then the pivot's actually it'd be more like that. If we suddenly go up there, swing failure, then it could be, you know, it could be like this. It could be a little bit wider. This could go lower. Different things could happen. That's basically, but we're trying to form something, and we just have to see what it's forming. I kind of prefer megaphone. Okay, that's kind of what I prefer right now. And so I'm just going to go with that idea for now, but I'm also just contemplating a diamond. All right. For this to pan out, I mean, you really have to squeeze this top. That would make sense because yesterday on Binance, you had $2 million worth of shorts. So a lot of short centered, and you had shorts coming into the lows. There was absorption, and now we just trapped shorts. We're getting trapped in the bottom of this this drop, and then they were basically squeezed up. And so actually, there isn't any bearish continuation at the moment. You're getting the bearish impulse, but you're not getting the bearish continuation. So that's bullish. When the bears are failing to continue, that's bullish. You know, when the bears are not succeeding after so much selling. Look at that price. Look at the volume and the price. Increasing in volume, decreasing prices, and look where we are now. That's not bearish. That's actually very bullish. So I'm thinking more bullish now than bearish, just simply because of how much volume came into these lows and how the price is just, it's just pinged off the bottom of this range. So that's kind of my idea of the price. If I just do a volume pool now, I'll hide the my levels. I'll put that into a group and I'll call it megaphone, and I'll come back to that. I just want to, when I do a trade plan, because there is a trade plan. So let me just do a volume range pool to see if the volume has changed. Okay, the value, okay, this is interesting. So you can see a change now. So I've done a new volume pool on this whole range. The value area low has now moved up. It's shifted up to this SR flip, just above this SR flip. Okay. The point of control is pretty much where it was. And now the value area high has moved up too. All the way up to there. You still have a high volume node here, which is where we had a rejection yesterday. You see how the price almost came into it perfectly and got rejected. So that's why these high volume nodes are very important, and they're very powerful as well. And then obviously what we can see here in this volume profile is that we do have one underneath us as well, slightly here. You see how in this whole volume profile it kind of sticks out there. That becomes your high volume. So in this whole mini profile, you have one node, one area of interest where there's highest volume. Okay, so that's how you can pick out the high volume nodes. But the best, obviously the best one is going to be the point of control. That's, look, you can see that's your highest volume node, and then within this cluster of volume you have lots of high volume nodes, but I'm not going to mark those out because we'd have to lose this this lower range, this lower part of this mini range. I think that's quite bullish. For the value area to go up, that's quite bullish. The price is still above the point of control, so that's quite bullish. We are in the highs of this range, but we have tested some levels into the upside, and the price is still in the highs. So that's kind of what you want to see. You want to see the price continuously test the highs and not to fall, to be still in the highs. And so after we've had this breakout on this inverse head and shoulders, we haven't had a crazy breakout, so we're into resistance, and that's the reason why. Why does that do this? Right, I'm gonna have to refresh my screen because I can't undo, and it's really frustrating. And I know what I have to do. I need to refresh this. Give me a second. Let me just go back there. Okay, that's better. Hopefully that's better. Right. Right, so we can delete that volume profile now. We'll just leave it for tomorrow. There's nothing really much to tell except that, yeah, nothing really much to tell from that. I can hide that now. Let me have a look at the daily candles as well. And so you can see that's quite interesting. So we broke above the previous bull market all-time high. This red candle was the test. So we've back tested the previous bull market all-time high. That obviously corresponds with a weekly level and a daily level. So we are on support right now, and this is, if this holds, there's no reason we don't go up. As long as this holds, which it is, it looks like it's holding. It looks like we want to go up. But as you can see, look, you can see here, the highs are getting higher. And so that's also very, you've got to be careful with that, because here, look, the highs are getting higher, and then you had a sell-off. So if you keep on squeezing and failing to go up, eventually there'll be exhaustion, because people will no longer market long the highs, and there's not enough short squeeze liquidity to take the price higher. So eventually that's bearish. So we don't want to be in this pattern for too long. You want it to play out, and then obviously there's only two things that can happen to the price after you break out. It's either up or down, and we just have to have a look to determine what could happen. So I'm thinking we are on support on the higher time frame. We are in a range. We have a local range here. We're above the point of control, which is acting as resistance, so it should therefore act as support, and maybe we'll attack the highs. So I am kind of inclined for higher prices. I'm in a long trade now, and I think you get a nice back test of this point of control, you could probably long. But unfortunately, you're in the middle of a range, and so anything here is a scalp, and you'd have to have a wide invalidation, so it would literally be a scalp. But effectively, anyone who's scalping would try and capture the price at the point of control or the value area low and try and trade it back to the upside. I'm not doing that. So for this megaphone to play out, so I'm contemplating a megaphone and a diamond. I think a megaphone is going to be easy to see, because for a megaphone, what you want is you want the price to just go up there and back test the top of that trend line that's broken. Probably, I think you can kind of ignore that one. I prefer the first one than this one. And then that you could potentially long there. So you're long in the highs, basically. How would that look with the all-time high? Let me have a look. Okay. So you're potentially longing the breakout, the back test of the breakout, and then you're attacking the all-time high. Where you also have a short plan as well, a short idea as well. And you have a daily level there too. So, okay, there's a few levels of interest. Look at that. So you're into resistance, so that's the problem with that trade. You're into an untapped daily level, and you're into the value area high. I'm not crazy fond of it. I think it'd be a lot easier to long the lows than the highs. But that is the trade. And then what you don't want when you take that trade is you don't want to find resistance and then fall back in to that's a failed pattern basically. You have a megaphone that's failed, and if that was to happen, you could short that because you have your invalidation. It's that little bit of market structure that's been created above that trend line break. I think that'll be a safer trade, to be honest with you. A failed megaphone. Reject off the daily level. Come right back underneath the trend line and sell off. Be a lot safer. The long is very easy to take because you could just have you take the back test of the trend line, but the problem is you're still into resistance. You've got this daily level and there's no reason why we continue. It just depends on whether longs open and whether shorts close, and it also depends on whether shorts there's enough continuation to squeeze the all-time high. And of course, swing failure, the all-time high, you would take a short too. So there's another short potential, and that's just a real simple swing failure of the all-time high. And that would look like this. The problem is you're shorting right back into this daily level. So you're shorting back into support. So actually, probably, even I think that would be more of a scalp to begin with. And then if you lose this daily level, then you can add, and you're probably in a swing. Yeah. If you swing failure, that's a scalp, because you can find resistance support here to continue. It's possible. It's not likely, but it's possible. Swing failure. Find resistance. Lose the daily level. That's your short. So you could short the swing failure. You can add to your short as you lose the daily level. That's your invalidation. The pivot that's been put in. That looks pretty bearish if that was to happen. That would be the all-time high, the current all-time high, and then you would probably target this previous bull market all-time high down here. The long I don't really like, even though it could be quite bullish and you could get quite an explosion. I'm not fond of it, just because you're longing into resistance. It's better to long the lows than to try and long the breakout, just in case you get a rejection. And then obviously the rejection, it would have to be timed perfectly. Like, timing is really important. It'd have to happen like roughly tomorrow. That happen tomorrow, really. So that when you do break this trend line, you're also breaking you're into the daily level. And of course, if you come into that trend line and that daily level perfectly at Sunday at 3 a.m, there's pretty strong resistance as well, because you have a little bit of confidence there. So the short would be to lose that trend line after you reclaim it for a failed megaphone. And then I'm not fond of that long. So in terms of longing, you probably want to try and, if we can get a back test somewhere, come back down here one more time, that's probably your opportunity to long. That actually looks like an inverse head and shoulders. That would probably be the opportunity to long if anyone's looking to long, but you're still, technically, we're still stuck in the range, and usually these ranges last a long time. They could last for days. So you don't really want to kind of have be in a long when you're stuck in a range. This was the best one where you lost the range and you reclaimed the range. That was the best one. So these are some ideas of what I'm thinking about. Let me just put them in my megaphone group and hide it. Now, if a diamond was to form, it's going to be quite painful because everyone is longing for a breakout or shorting for a breakout, and it's not going to come. And I think this is the pivot, this one and this one. And so the next thing we'd be looking for is a lower high. Yeah. It's not easy to short these, but effectively for a diamond pattern, you really want to just short the lower high and long the higher low. And right now we're heading to the highs, so potentially you'd get a lower high, and then as the price works its way back down, you're looking to long the higher low. And you're just a diamond pattern, you just want to trade the range, but you want to try and catch the price at the edge of the range, at the edges. And effectively with a diamond pattern, you're looking at being potentially in the long and the short at the same time. But this is a bearish it's a bearish pattern in the context of where we are now, because eventually it will break out and probably to the downside. That's the probability of a diamond pattern in the context of where we are now. It's like a failed auction. Just kind of something like this. There's a couple of patterns in play at the moment. Okay, does that clear everything up? Is anyone here? Don't really think there's anything more to say about Bitcoin. Right. I can't see anything interesting. There might be, I just can't see it. The weekly candle is going to form by this weekend. Potentially we're still range bound, you know, and potentially we're forming a flat correction here over the next few weeks. I don't necessarily like we've bounced. Are we going to continue? I don't think so. I think it's more likely than not that we potentially come back one more time to continue. Like, it'd be very weird to just bounce and then continue. We're not seeing like an increase, a crazy increase in volume. It's like a reduction in volume in this consolidation range. So I think it's likely that Bitcoin ranges, and actually that's the most bullish scenario for the altcoins. If Bitcoin was to now be trapped for a while here, whichever pattern is in play, probably a megaphone would be nice, but you wouldn't necessarily break it out there. You'd probably just go up and there and then down there. I don't know. I think you probably do need to break out. Diamond is going to look bearish as well. That's the problem. But this pattern, if it plays out like this, it could go on to the end of the month for the next week. It could be range bound. So actually, I think this is probably the best case for the alts. And then you will see a sell-off after the alts have pumped by the end of the month. That will happen with Bitcoin. That will be then you'll be looking at that will be your A, B, C, and that's probably what you're looking at. And actually, you're now looking at that. I had this harmonic, but now I'm looking at something slightly different, a different harmonic. Let me have a look at that. Not this cipher. Where's that image? It's not here, is it? That's the image. Okay, that's my images. Which one is it? When you make a lower high, so what is it that I'm looking for potentially? I'm imagining a diamond. I'm not imagining a megaphone at the moment. Let's just say that's your pivot. Again, the reason I had a problem with that was because I didn't like how that was so deep. That's why I did it lower down here before. But that would require us to go much lower. I mean, it's still in player. It's similar to the cipher, except I had the cipher up there. It's basically a cipher still. Let's get that rid of that. It's still in a cipher, but the pivot is still, it's not there. If this is a diamond and that pivot holds, stupid. That would be a cipher. Where's the cipher on this image? It's not in this image. Okay. It's annoying. But it says bat here, huh? Which bat? Okay. I can go with bat. They've called it bat here. See that one there? This one here. This bullish bat, XA, B, C, D. XA, B, C, D. If that pivot holds, and this is a diamond, then we're at the C of a bullish bat. Okay? Potentially. And then I'll be looking for a 1-to-1, which is from the A to the B to the C to the D. I'll be looking for a 1-to-1. And then you'll be looking. This doesn't matter. The pivot has to hold. If that's the pivot, that has to hold. That would be a diamond. That would be your pivot. You form your diamond and then you go down. This can do whatever, but it just has to get there roughly at the right time. Timing is really important with harmonics. So let me try and work out the timer. So there's actually a slightly higher time frame short trade in play right now, just based on this idea. It's always safer with these harmonics to take the last point once the harmonic is completed. This is speculative. The actual trade on a harmonic, if this pivot holds, this harmonic's in play, then based on a diamond pattern at the local level, then actually it's a lot safer and lucrative to take the D here. And good morning, Craig. Yes, Bark, Blue Arctic. Yes, I will have a look. It's a lot safer to take this pivot. But really what you want to do is you want to take the swing failure of this one here. If we make that, if this completes, it's a big if, that would be the trade. You're not really trying to catch the low if the price comes down at the right time. You're not trying to catch the low because it could go low. The entry is getting back above there. Then you have your invalidation. Okay. And then you're looking at a higher time frame bullish harmonic. And I think it would probably, if that was to happen, then you're impulsing away. That's probably your C correction done. And then you're heading to 90,000. That would be the trade. There is a short potential here. If that pivot holds, it's a big if. If we're not looking at a megaphone, we're looking at a diamond, then, I mean, that's your trade right now. Really good ROI all the way down, probably to this B. I wouldn't risk it trying to complete. I wouldn't try and complete a harmonic if you enter at the C. You just try and target your, probably this first low here, and that would be, it's actually slightly higher than the golden pocket. Yeah, look at that one. I mean, your take profit's going to be here. That's your take profit, the local golden pocket, and then you're probably targeting this B, not necessarily this lower one, because at any one of these pivots you can get a swing failure and the harmonic fails, but it's still bullish because you just have so much demand that you're just creating higher lows, but you're still completing the ABC correction on this higher time frame wave 4 that we're in right now. So the question is, when it comes to this, let me put this into my harmonic. I've called it cipher, doesn't matter. The question is now, we're in an ABC correction, and actually I can move that image to the question is, are we creating a megaphone to go up? Are we creating a diamond to go back down? And if we are going up, if we are in a megaphone and we are going up, then we were looking at an extended flat or an extended flat correction, because this could come down now. That's your A, B, C to go up, and coming down here to the previous bull market high might be overextended in the downside. It might be much flatter. So if that was to happen, you have this all-time high here now. Let's say you're in a megaphone. Let's say we break out. That would be your, that wouldn't be the next wave. That would probably be the B. That would be the C. Back test. And then you're going. So then you have your ABC here, A, B, C here. As long as if you do take out this all-time high, you just can't come back underneath it, because that would look like a failed auction. That's bullish. Of all the corrections, I think this is the most bullish one. But in terms of snapping out of this kind of area of interest where we are right now, if you want to snap out, let me just rename that as extended. See, if you want to snap out, I don't know, probably you probably have to go down to build up the shorts and then squeeze out. So maybe that's the most bullish. A bullish harmonic. All the shorts will enter a lower high here. Lots of shorts are gathered in these pivots. Come down here, swing failure this lows, clear the liquidity, and then to the moon. I think that this is literally my preferred scenario, but I can't tell you what's going to happen. Good morning, DNTSAVEHER. Take a look at BHC. Okay. Any questions on this at the moment? We have the end of the month coming. Look where we are. We're above the previous bull market all-time high. That is pretty strong. Do we go back down to test this SR flip before we push up after we've completed this monthly candle? Or do we close much higher to just come back into the previous bull market high to go up? Like, we're in quite an important week this next week, so we have to see what happens. I mean, it's clear to see that we're in the bull run. Look, how many months of green candles have we had now? 1, 2, 3, 4, 5, 6. We've had 7 months of up, 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 up. Yeah. When's the last time we had that? 1, 2, 3, 4, 5. So we've had 7 months of up now. We last bull market, we only had 6 months of up. See, we had this little red candle here. If I look at the index, I mean, we're potentially looking at this actually. Like, when I'm looking at the comparison of where we are, I think we're here. I think we're looking at this. It looks like it. If the next month we get an explosion like that, it looks like this. It looks like we're going to space. That's and it will accelerate. You see how it accelerates? It just goes higher and higher and higher. It just gets steeper, and I think we just, that's what it looks like. So we could accelerate just all the way to 1 million. You have a couple of outer trend lines here that we have to pay attention to. This one here. Why is that gone to that? Trend lines always change colors. Just rename this. I like to rename these. Extended, right. Yeah. Right. you have a couple of trend lines. One is that channel that I've gone over in the past, but you can just take these two pivot highs. So the question now as we go up is what happens when we hit this first one. Okay, and then if we do, to go up in the future, you'd have to this first yellow line that I have here. Where's the second one? Where did it go? Okay, let me just hide. Let me just hide these. Keep those. You would have to get past that. You'd have to flip that into support to get past it, and then you'll rock it, because you're then looking at a higher time frame trend line which has been broken and back tested, and these are the really bullish ones, the ones that are going up. So if you can break and back test a trend line that's in the upward direction, that's really bullish. It's kind of like the same idea of a megaphone, but without the megaphone. Yeah, it's the same idea, but this is like a higher time frame megaphone, except obviously, you know, we lost the bottoms here. But it's the kind of same idea that if you break these upward slanting trend lines, back test them, then you're basically going to explode. And then probably look, you have a higher limit, and it would be this outer trend line from these last two pivots. That would be your outer limit. I think that would be the maximum range of where the price would go to in this bull market, and it would probably coincide with some kind of higher time frame, either fib extension or trend based fib, once the third and the fourth wave completes. And so once we have the fourth wave, we can do like a trend, like let's say if this was to play out the way this I've suggested, and who knows, no one knows, this is just speculative. Let's say it goes up to there and then to here. Roughly. Then you'd have to see if there are any fibs that line up, and that would probably be the best place. At the moment, this idea doesn't line up anywhere. At the moment, it doesn't. You just have to see. We just have to see where the wave 4 completes. And wherever it does, you'll suddenly get an alignment of fibs, and that will probably be the target, because that's where people will sell, when you have an alignment of fibs on the higher time frame. All right, so that is Bitcoin. If there's no questions, I'm gonna move on to something else. Slurf, we can have a look at Slurf quickly. I want to have a look at TRVL. Okay, so the question for you, high end, is did you sell at 9 cents? That was the question I had. I was thinking about you when I saw it reach 9 point. When I saw that happen, I was thinking about you. Can you believe that? I was thinking about our conversation, and I was wondering whether you sold. Did you sell? Are you still here? Well, I hope you did, because we were having a conversation about that, and I was trying to explain to you about the trapped liquidity in this down move, and how this was the people's chance to escape from bad positions. I did, but phone again. I got into a higher position, so I won't do that again. Okay, it takes practice, it takes time, it takes experience. Don't beat yourself. Hopefully you didn't take a full position. I guess you did. Yeah. There's so many opportunities in the bull market. Never FOMO. Not now. If you want to FOMO at the end, but at least you've got everyone FOMOing it, and even if you FOMO your price, you'll still probably make money because there are other people FOMOing in with you. Right now, we're still quite early. You don't want to FOMO in because we're still quite early. All right. So I was contemplating, if you remember, I was contemplating NABC, and I did kind of suggest that I didn't think this was it, and lo and behold, it wasn't. It isn't. It's not it. It is kind of doing what I imagined, just simply because of the mechanics of the markets. You have all of this trapped liquidity. Everyone thought it was going to go up. Suddenly they were underwater, and this was their one chance to escape. And as you can see, people are escaping. You have two types of situation here. You have people exiting, and also you have these longs taking profit. So you have combined selling pressure as the price ascends, and there is something I have in mind here. Let me just, for the sake of consistency though, let me update the volume and just see that see if there's any changes to the volume. So this is on the Bybit volume. I'm going to do HTX as well, and also I'm going to check to see if the volume percentages have changed or not between the exchanges. So that's the value area high. Has moved down slightly. The point of control is the same place. The value area low is in the same place. It's a slight change. If I have a look at HTX, oh, that's not a pretty pattern. That's a head and shoulders pattern. It's not pretty at all. No real change. Not much. Not really something to write home about. There's a little bit of a volume deficiency here. So as the price loses its current high in a volume node here, then we're probably heading to the point of control. I can't tell you we are or not. I'm just saying we probably are. Because look, we're underneath this high volume node. We're underneath these VWAPs, these anchored VWAPs that I drew from the launch and from this high. And there's a little bit of a volume gap in this ascent as we came up. There's a few volume gaps. There's a volume gap there. There's a volume gap here. So we're probably coming down. We'll probably come down to fill those gaps. And I still think the point of control is going to be a good place to accumulate, because that's, you see how that's the highest volume node in this whole volume range, and potentially that could coincide with everything coincides with Bitcoin. Of course, this sell-off is something else. So we are seeing, let me have a look again, hold on. This is HTX. I'll go back to Bybit actually, because I prefer Bybit. And actually what I want to do, which I said I wanted to do, was to have a look at CoinGecko and Slurf. I wouldn't worry about Slurf. Like, I know you're underwater now a little bit. I think at a higher time frame, I think it's going to do fine. If you're in spot, just hodl. But it's always good to have dry powder so you can improve your position. So when I look at the markets, I look at the volume, the last 24 hours. This is so on the spot, HTX is doing very well. And then you have Gate. Combined, that's about 150 or so, 57 or so $million worth of trading. If I go to perpetuals, now that's very interesting. See that? Bybit, 130 million. So Bybit now is really putting in a lot of volume when it comes to Slurf, and that's all on the derivatives. See that? So it's actually doing more volume. No, it isn't. Almost the same volume as HTX on spot. That's very interesting. There's a lot of traders trading this. You have to bear that in mind. And one thing about traders is they're going to be taking profit. They're not hodling. Yeah. Something to bear in mind. When you've got traders involved, they're just trading the movements. They're not fussed about how far this can go and how high this can moon. They only care about the small fluctuations of price. So yeah, so I actually think you can pretty much now ignore all the other charts and just focus on Bybit. That's what I think, and that's my exchange of choice in any case. So looking at the Bybit chart, I've updated the volume area. Is this a wave 5? Are we looking at this extended, this prolonged ABC correction? Or was this our wave 5 here? Our first wave? And was that nothing? Was that a... 0, 1, 2, 3, 4, 5. Was that the first wave right at the beginning? Or was this some kind of 5 waves? I'm not really feeling this is the 5 waves. I'm not really looking. I'm looking at it. I see too many red candles. I'm not seeing crazy impulse. I'm seeing a little bit of impulse, but it's not crazy impulse. And yeah, I'm not really seeing crazy impulsiveness. It looks impulsive, but it's not like, when I look at impulse, this is quite impulsive. It's like impulsive buying, very impulsive behavior. When you look, there's like no reds, like 3 greens, take profit, and then just more greens. This is very different. So I'm not fond of this. I still think this is corrective. After you've had your first 5 waves of the first wave there. And so I still think we're in some kind of ABC. It looks very flat. And right now for accumulation, you have this pivot putting in here, all the way down to here. So you have the golden pocket. Why have I got a fib line there? What is that? I'm not sure. It's trend based. Okay, delete that. Let me just see if there's another high volume node. Yeah, we're at the high volume node now. It's we're kind of losing it. Do I not mark it? No. Somewhere there. So what you're looking for is confluence of levels for the best entries on any token, on any asset. when you're looking at the charts, you're creating these lines, and then you're looking for areas of interest where you get the most lines coincide, and time has a large part to play, so coming at the right time is also important. And you have your okay, this is just hypothetical. I don't really like this. It was hypothetical, it was speculative. I'm gonna delete it, get rid of these volume levels now. Well, I kind of had a trade plan to go up into the golden pocket there, look. So it kind of almost similarly did what I thought it could do, but the problem here is it faked out this pivot here. It was like a this was like a 3 drives pattern. 1, 2, 3. That was a 3 drives pattern. I should have seen that. Excuse me. All right, that's irrelevant now. Let me just delete it. I can go. So we have our higher time frame fib. Let me just draw that again. Let me get rid of the volume levels here. That's fine. That's fine. Where's that EW? Get rid of that as well. All right. So from the all-time low to the all-time high, do a full fib on the log scale. We have this local one, which is slightly higher. Delete that for now. And then we have from the all-time high down to this pivot here. Came nicely into the golden pocket there, huh? Mm-hmm. Not really interesting. To get back up, you're going to have to get past that golden pocket as well. Okay. So we have that higher time frame from the low to the high. And that's your extension, isn't it? That's your high volume low. Then you put that in the volume levels. What was that one? It's not bad, huh? That can. It's pretty much the same on these pivots. It's almost identical. Each of these lower pivots, this one and this one, from this pivot to this pivot, is exactly the same. Exactly the same, just by using this pivot. So I think the scan is in play at the moment. See the resistance, support, and now it looks like we've fallen underneath it. It doesn't mean we're going down. Like, I don't think we're still going to do this. I think you're just going to kind of probably. So if you have your, let me just hide that for a second. Go to the higher time frame, monthly and the weekly. I think the best place to buy this would be the weekly open. The weekly open. If the price can get all the way down to the weekly open, you have a really strong area there. I think that's really strong. Just call it weekly for now. That coincides with this 3-day order block. It coincides with these lows there. I think that's the place to, that would be a good long. The invalidation underneath the low. There's 2 longs potentially with this. One would be right there, and one will be a swing failure, and that's it. That's your 2 longs. And so that's the golden pocket. See that? It's the golden pocket. That's where you want to get involved. And that's the point of control. Golden pocket, point of control. That weekly open. Let me rename it to weekly open. You can all in on that right there. And just hodl for the rest of the market. I think then you'll be looking for, so the long opportunity here would be reaction. You'd have to start with a wide invalidation. And then the problem is if you lose the golden pocket, if you lose that weekly open and the point of control, you see they're kind of together. If you lose that, have a reaction, just falls, back test it as resistance. You see that it's forming resistance against that weekly open. That's not pretty, that's not good. And you could potentially go lower just to try and take out these lows here, the liquidity that's gathered underneath these lows, which is where people's stop losses are here. And actually in all of this, that is the most lucrative trade, is going to be a swing failure of this low here. I think after a deep correction, lose the value area, take out the liquidity, come into the 786, just a crazy sell off, but then you just bounce right back above this swing failure, back into the value area. You could take that trade all day long, and that's probably your pivot. Once you're back into the value area, that's like a fake out to the lows. You have your invalidation, and that could be your ABC finished. So the question here is going to be whether the point of control, I think the point of control will probably offer the final resting place, just simply because it's the golden pocket, it's the weekly open, and it's the highest volume node on this range. That's probably my preferred choice, and for where the price finally rests. And it's a higher low, you know, it's quite bullish. Doesn't mean we're going to necessarily crazy impulse yet either. We could still be range locked. You always have to bear that in mind. And even though I've got this going to the moon, The reality is that you have to just focus on trading the range until it finally breaks. And even though this is an ABC, it could be much more complicated than that. It could be ABC, 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 and then we're going, you know? Do you see what I'm saying? Like it could be a lot more complicated than just a simple ABC. You could have a much more extended and prolonged ABC. We just don't know. And the thing is, right now, traders are moving this around. They don't want it to break out. They just want to, they're making money trading this range. They're not interested in the breakout because most of the money for traders is trading the range, not actually in breaking out. Breaking out is only good for hodlers. So if we are in this prolonged ABC, it'll be from there to there to there, like an X. Did I do that right? What the hell? No, that was the wrong one. This one. See, something like that. And that still is the best trade right down there. So this could, we don't know. We don't know. I think the next real amazing opportunity is here. And you just have to see what happens. And if you have this kind of really long correction all the way to mid-April, take out the lows and then to the moon. All right, it's an idea. I can't predict the future. I don't know if this is going to behave the way I'm imagining. It's just, it could. It's just, it's a possibility, and it could do a million other things. All right. Oh, David is saying Slurf looks like it will do what Grok did. Let's have a look at Grok, just to kind of compare what something. David knows because he was trading Grok. We were trading it together. Get rid of all this rubbish. You know what, David? Just get rid of all of it. Remove drawings, whatever. Don't need them. So you have your impulse at the beginning. Yeah? 1, 2, 3, 4, 5. ABC, ABC. And then... Was that an impulse? That's impulsive. I think that's your 5 here. 1, 2, 3, 4, 5. It just started off right at the beginning. I remember that because that was really impulsive. That was your first impulse. I think the rest is just a correction, isn't it? ABC, ABC. What is this rubbish? That's just people exiting. That's the trap liquidity being cleared. That's quite impulsive though, isn't it? 1, 2, 3, 4. Don't know. That might be easier to see. Maybe that was a 5 wave. No. See, it doesn't work because the next impulse is just has to clear this first wave. This first wave was clearly impulsive. Look. So potentially we're still in a correction. We're above the value area, huh? They haven't made an all-time high. It looks like it's losing strength. Could be some kind of higher time frame. Just draw these in. Low. There's a lot of volume at the point of control. That's your 5. That's your 4. Here. That's your 3. 1, 2, 3, 4, 5. I think that's what happened. Zoom in a little bit. 1, 2. Yeah. ABC. Whatever. Something like that. Okay. That's your ABC there. So we are in an extended prolonged rather correction. Point of control. Or maybe even lower, I don't know, maybe value area low. But there is a lot of volume at the point of control, that's the thing. So you wouldn't expect the point of control to not react. That would put this actually in more of 50%. Saying 4-pip block. Slightly higher, potentially. Let me just pull that volume again. Slightly higher, and there's a little high volume node here as well. I wonder if that's going to offer some support. To get that far, you'd expect it to go further though, like even though there's a high volume node, why not just push further? Right. I mean, I still think that would be the entry, the point of control. But then you've got a high volume node down here. One there, one there. Let me see. Correction. Impulse. So we do this. AW. Horizontal raise. What's that volume? Volume levels. Yeah, you're welcome. Sorry, I just got distracted into Grok now that David distracted me. I'm stuck. Rid of that. Let's have a look at this as well. From the low to the high. Came into the point of control here. It's a bit of confluence here as well, a bit higher up. A high volume node. Yeah, I mean, you see, it could just as easily just stop there. Doesn't have to go all the way down. And that could be correction over. Let me see if there's any levels other than that. Monthly. So we came into the top of the monthly level. That's, I mean, look at that. That's a beautiful, it's a lovely, juicy monthly level. Right here in the golden pocket. With a token like Grok, you kind of want it to be tapped. So let me just hide those now. It's the monthly level. You've got one up there which has now been cleared of liquidity. There's a weekly level there as well. Hasn't been cleared of liquidity yet. You've got one here, but that's not a great one. There's one there as well, but it's not great. Just for the sake of consistency, I'll put it in, and then obviously you have your daily levels. You have a bunch. Obviously a lot down here, and then you've got, where's the point of control? There's one there. There's a lot on the way down. If I wanted to buy this token, I'd try and catch it down here into that monthly level. Lose the value area one more time. Make people dump their bags. Get people bearish. Same thing really. Just take out that low. Kind of want that to happen. Get people to sell their bags, and then it may not happen, but you are correcting, so it could happen. It's kind of what you want. Swing failure. Come into the golden pocket, monthly level, swing failure, lose the value area low. You want to lose it. Get people to dump their bags, and then that'll be your correction complete. Yeah. I don't know. I don't really like this token, to be honest with you, David, even though you're kind of ABC correcting. It depends how it drops here, I think. I think if it should drop quite fast, because you had a lot, it was, I mean, even though I'm considering this to be a correction, it was quite an impulsive correction. I mean, maybe this is the wave, first wave, huh? Don't know. But that looks very 5-wavy. Right, I'm not sure, but I think the best entry is going to be these lows. That's the safest one on the swing failure. And I wouldn't even look at this token until that happened. Even though you're at the value area high, that's really the best space to buy. It's quite poor that it hasn't taken that, making a high here. Yeah, that's weak. And now you're making a double, kind of like a double top. I think this is going to head down. This looks like it wants to correct. Right, that's Grok. It could be similar to Slurf, except Slurf is much stronger, I think. Just because of the amount of volume that's on Slurf and on how many exchanges that's on Slurf. Could this be a longer correction pushing into April? Yes, it could be. This could be really be ranging, and then obviously the areas of interest are what I suggested. The point of control would be the best place to pick up this token, and then your take profit will probably be like this 50 fib or this high volume node, and then the long of the century would be a swing failure of this local range here, and that would be amazing. That's Slurf. There's a few requests here. No one wants to look at TRVL. All right. Craig is here. Bark. He wanted Bark. Do I have to do full analysis though? That's the question. There's only one chart here. Bitmart. Oh god, what is that? It only launched in February. First water commodity token. Oh, so it's an RWA. That's interesting. Real world assets. Dex tools. Let's have a look at Dex tools. Injection of volume. I don't know what to say. It's on Uniswap. It's on Uniswap and it's on Bitmart. Launched on the 8th of January. On Bitmart it was from February. These new tokens are very speculative, but you can make a lot of money on them. But it's just about the liquidity as well. Is there enough liquidity to sell when you get higher prices? For all intents purposes, you could, this is still kind of range bound, but it's not really a big range like in terms of time. That being said, look, the price has gone from this low to now 251%. It's probably worth like slowly accumulating with small amounts of money and seeing what happens. That's what I would suggest. I wouldn't, there's no trade here because we're just ranging now, we're just consolidating. Someone's obviously taking a big chunk out of this. 269,000 tokens were traded. It's not much, huh? 269,000 at 3 cents. It's a very low market cap, isn't it? What's the market cap on this? Bark. Coin. I can spell it right. Can't. Doesn't say, but I think the market cap's really, really rubbish. Doesn't say. Interesting, huh? I mean, this could be good, huh? How do I buy some? Buy some of this. Just a gamble, huh? It's a gamble. Revenue from water orders, manual, automatic. This is a gamble. Who's this guy? The team. Seth. Oh, he's American, is he? Jed. He's Americans. That cowboy hat. Greenland. Nicole Bishop. Customer relations. Mm. 700. I mean, you're literally catching this really early. It's a very small market cap token. It's only just released on Bitmart. At 3 cents. How much is $1,000 at 3 cents? Got some green volume coming in, huh? I mean, who knows? Like, it could impulse out of this. It's only just started, huh? Look, it only just started impulsing. This could be the impulse. Consolidation. RWA is on the radar. Like, that's a bullish candle. On the weekly time frame. There's some money coming in there now, look. So it's already up just from that lows there. It's already up like 200%. Because the volume is low, you're not going to be able to accumulate a lot. Point control. I don't think there's anything to say except it's very speculative and it's a gamble, okay, which will probably pay off because right now, oh hey look, the market cap 3 million. There's not many holders. And there's no way to know how they're making their money either. It's a very simple site that they've created. So I could have created this site, launched a token. Do you know what I mean? Created that white. I could have done this. Anyone can do this. I can make a better site. Put some pictures of my mates up there. Create a Telegram group. Invite some of my friends. Launch it on Uniswap as an RWA. I could do all of this. They haven't actually done anything. That's the thing. So I think effectively what this is a money raising scheme. Whether they're going to do what they suggest or not, who knows? No one knows. Okay, no one knows whether they're going to fulfill their plan. But they've described the problem. Oh, here it is. So the team has marketing migration. I don't know what that is. Dex marketing. I don't know if this tokenomics is well thought out. Actually, our water claim smart contract entitles holders to participate in direct share. of the Blue Arctic Water Company profits direct share. So the token reflects equity. Individuals have the ability to exchange their tokens for water claims. These tokens are then burnt and removed from circulating supply. The amount of tokens required per claim is determined at the opening of the water claim exchange cycle. So as people exchange their tokens for water claims, the claims are burnt. The water tokens are burnt. Water claims are highly limited. 50 are available per cycle, with a maximum of 20 cycles. The earlier the claim is minted, the higher its share of revenue. Generates revenue through token injection. Water claims. The remainder of revenue is held by the company. Yeah. Is this the only one that does water commodities? Basically what they're doing is they're tokenizing water. But I don't know how well this is thought out. It's certainly not decentralized, and it's not peer-to-peer or anything like that. So it's basically a company that's using the blockchain as a technology to solve a problem, potentially. I think in the context of the bull market, it's probably worth a gamble, but I don't even have a BitMarket account, so I'm probably not going to bother. Bitmart. Do I have a Bitmart account? Check. I've got BitGet. I'm not going to create thousands of accounts for obscure tokens. All right, that's that. David is saying that there's a bullish divergence on Bitcoin, so I'm going to have a look at exo charts now and see. Oh wow, look at that. That's amazing. It's kind of what you want to see. Look, CVD going down, price higher low. See that? Higher low, higher low, lower low, low low on the CVD, higher low on the price. So the selling orders are being absorbed. It just tells you that the bias is up. People are buying and absorbing selling at market. That's good to see. This whole move, you can see the OI was dropping. That was basically shorts closing out. Not crazy liquidations yet, just tiny liquidations. You got a long liquidated there as this price went down, and then it came back up. So now the OI is starting to go up. Maybe longs are going to start entering now. That little, oh no, these are shorts going in. These are short. This is shorting, isn't it? It's like shorting. Oh, shorts. They're shorting, and look, the price isn't going anywhere. It's not flinching. So they're shorting into big long limit orders here in this kind of local price range. So you don't really want that to happen. When you short, you want the price to move away from you. You don't want to short and the price to be absorbed by someone who's got a bigger account and they've just got long limit orders here. They're just buying at limit. So this is good to see. So probably a move up on BTC. Let me have a look at BTC to see what that means in context. Excuse me. Let me just get my ideas out. Okay. Let's see. You gonna take that trade, David, or maybe that one? Or maybe just a swing failure of these highs here, just to kind of confirm the shape a little bit more of this this megaphone. If we go up, just to kind of who knows. All right, something to let's look at. That's fine. Name wants to see TRVL. Me too. TRVL, it's gonna take a little bit of time. Someone wanted me to have a look at SHIB quickly. Well, I looked at SHIB recently, and I'll just quickly go over it so you don't get bored waiting for TRVL. I'm not going to spend time on this. That's your, well, I don't know what to say really. You kind of want it to come down, huh? You're into the golden pocket. You lost it. We're back into it. Excuse me. That's quite impulsive. High volume. A little bit of selling. A little bit of continuation. Oh, look, we back tested the volume area. So let me just get rid of these brush strokes now. I think if you lose that value area high, then you're heading down to the golden pocket. There's nothing really to say about this. I think the problem with Shiba Inu is that it's such a high market cap that it's going to require a lot of volume to take it upwards. And I just think in the context of where we are now, you probably want that to happen in alt season. This is a large buy. These are large. This is crazy large buying here. So someone has just literally at market put a ton of value into this, and you basically got this kind of head and shoulders versus head and shoulders patterns. You have this little breakout. I think it's more likely than not that we head down and just fill the gaps here that are formed. We're into this trap liquidity up there. That's where we're seeing resistance. I think it's more likely than not that we head down. That's what I think. You need to see increasing volume for a continued push up. And then the other thing that I'm thinking to myself is you've got SHIB Doge, and you know, you're sitting in a bit of a downtrend on this higher time frame, slightly, but you see we've come above the why is this important? It's important because some people who are in Doge will be trading against SHIB just to make money. Yeah, so this is a range bound, and you know, what's happened is someone has bought SHIB maybe from Doge straight into Doge from SHIB, and then they've taken it right back into Doge. Yeah, so that's what's going on here. That's what I'm seeing a little bit of. And you've lost against Doge. You've basically, it's a swing failure pattern of the high here. That's a swing failure. You've lost the value area high against Doge. You've come into this high volume node. You've cleared all that liquidity in one go, and you see how the price is just coming right back into Doge. Well, it's probably going to come all the way back to the point of control now. There's no stopping it. There's no support created in this move up. against Doge. A little bit there, but nothing really. And that's what's happening right now. That's what I'm seeing. This, I think the volume is coming from Doge. It hasn't actually come in from the wider market. And I still think SHIB is a side play to Doge. I think Doge is the king, and then people will use SHIB to trade in between the two because they're both quite high market cap tokens. And you see the range from the value area low to the value area high is 84%. So anyone who is accumulating SHIB at the lows here will take all of their value back into Doge as you go up into the highs there. And then maybe it will come back down and they'll reaccumulate SHIB. They'll do exactly the same thing. And the range against Doge could continue. There's no impulse here. It's just range bound. So I think that's what's going on right now. And maybe this behavior will continue for the duration of the bull market. But the daddy is Doge, not SHIB. There's no way that SHIB is going to flip Doge. I can't see that ever, actually. All right, that's my SHIB update. Right, TRVL. I'm going to take a 5-minute break because I want to top up my tea because I've run out, and then I'm going to come back and I'll do TRVL. So TRVL, and I'm going to spend a little bit more time on TRVL just because I'm trying that this Elliott wave thing is changing and I just want to see how it develops, you know. So I'm gonna take a break. Okay, be back in a second. Okay, I'm back. Hope everyone's still here. If not, that's fine. Okay, let me have a look at TRVL. So what's happening with TRVL? So yesterday I did a stream and I was kind of contemplating some things about the price action and the waves, and I had this idea that if this happened, then this would be a good place to buy. But the more I think about it, the less I'm thinking this is going to happen. Okay. So let me just put that away for a second. And I just want to explain some things about the price. And let me just put this away. Name, long trade, mid-April. I'll just put the long trade mid-April. Just for reference. But I don't, like, let me explain. Hide that as well. Okay. So a few things that I'm looking at with TRVL, and I'm always looking at the candles as well. Let me just hide that trend line. So we've had a really powerful weekly candle, weekly pivot, and so you can't ignore that. Is good volume, weekly pivot on fib time. As far as I'm concerned, that is a back test of support, and there's no reason to think that the price is just going to go down, but everything is possible in crypto, so you have to contemplate the possibilities of everything. Yeah, so when I'm contemplating to the downside, you know, like I'm bullish as hell. I'm crazy bullish. Like I'm thinking this is going to go up to easily the all-time high. I can't see it not getting to the all-time high. And I think as we hit the all-time high, we're probably going to overshoot into price discovery. And, you know, there's really there's no limit in price discovery, especially with Dtravel and TRVL, with the idea of what it is, which is fitting into the RWA narrative, fitting into the AI narrative, fitting into the deep-in narrative. And actually, it's a working product, which I've used, I've tested, and I've proved. Okay. And I've shared that in previous videos. I think really there's no limit to my bullishness on this token. When I consider the market cap of Airbnb and Booking.com and via Verbo, I think it'd be very easy for TRVL to get to a $1 billion market cap. I don't really see that as a problem, logically and mentally. That would put us at about let me have a look, because I haven't looked at this in a while. What are we currently at? 30 million. I mean, that's already a big achievement. So to get to $1 billion, you're basically taking, you're basically looking at a 10x would put us at 300. 100x would put us at 3 billion. So not a 10x. My maths has gone. It's 10 times 3, so it's a 30x. So it's just over a 30x would put us at 1 billion. So where would 30x put us from here? So about $3 would put us at, yeah, so it's, oh yeah, because it's in decimals. So you're basically looking at $3 at 900 million. So $3.3 is a $1 billion market cap. I really don't see how that can't happen. And obviously everything has got to do with Bitcoin. Just because of what it is. And that would be a very, very tiny slice out of Airbnb's market cap and Booking.com and Verbo. And all you really need is the crypto community to understand and get a hold of the idea of what this is. So when I am thinking about to the downside, it doesn't mean I'm bearish. I'm just looking for good areas to pick up the token for buying. I'm not selling this token until I reach my higher targets. If I sell, or if I'm planning to sell, and I always said that once we get above 9 cents that I could be looking to start selling, but I'll be looking to sell to buy back, sell to buy back, sell to buy back. So I'll be looking to trade this now. It's not on derivatives, it's on spot, but that's fine. Now that we're above my threshold, which was 9 cents, now we're starting to reach the higher range. So we're in the higher range right now. The dividing line is 9 cents, and the longer we stay above 9 cents, the more acceptance we will have above 9 cents, and so therefore 9 cents will psychologically become our lowest point of support. Not our lowest point of support, but our closest point of support. So that's the launch price, and effectively what that is an SR flip. So now we're moving into potentially empty space, black space, and once you start moving up into empty space, the price can move quite fast, quite quickly, and you know there isn't much. You see how the price dropped. It's very possible that the price could go up really fast, and so therefore it's very important that people look to take profit, because in the same way the price can move up very fast, you could also see quick drops as well. If the price starts moving up quickly, you can see quick drops. So it's important that people look to take profits, and the way to do that with TRVL would be to sell and then to buy back low. Yeah, so you're not looking to sell and exit. I'm not looking to sell and exit right now. Yeah, but what I am trying to do now, what I'm thinking about is growing my TRVL account, building my TRVL account. And I'm not trying to do that. You can't do that if you're hodling TRVL and nothing else and doing nothing else. What you'll do is you'll speculate. So you'll have a portfolio and you'll try and trade between tokens. And sometimes one token will pump and you'll sell that and you'll buy into another token that has, and you'll wait and wait and wait. It's a bit of a kind of guessing game. And I don't really like doing that. What I would rather do is create a trade plan of areas of interest, and I will sell, and my buying back will be like taking profit, but I'll be taking the profit into TRVL. Yeah, so I'm basically increasing my TRVL account. So that's kind of what I'm thinking about going forward, and I'll be starting to create ideas of trade plans on TRVL on the local time frame. On the higher time frame, I've already explained what I'm thinking of, and that would be to wait for alt season where ETH has gone parabolic, and that will be then the kind of the timing has to be correct where all the alts are pumping, and that will be the final exit potentially for most people, where they will slowly scale out of alt season. That will be the moment to do that. And that might coincide with some kind of exchange launch too, because if you do get a Binance exchange launch, that's often considered as exit liquidity for most people. But anyway, we have to see when that happens in the future. So when I'm looking at like the ideas of going down, it's quite simply areas to pick up the token, because I'm still looking to buy more token lower down. But also, I am thinking now that we're above 9 cents of risking a percentage, a small percentage in a trade. And I'm considering that as a hedge. Yeah, because there's no way to short in this market. Otherwise, I would take a short. So the only way to do it would be to sell. You have an invalidation, but I wouldn't buy market. I wouldn't set an order to buy market automatically. If I'm invalidated, I'll be looking to scale back in. So it would be like scaling out. Into scaling short will be selling with scaling and shorting by selling, scaling. And then if you're invalidated, you have to scale back in. That's the only real way we can do it on spot, especially when it's not crazy liquidity at the moment. So that's kind of what I'm thinking about right now. So looking at the candles, we came back down yesterday and we pushed right back up. The monthly candle is looking bullish AF, really. This is looking really bullish. I can't see any weakness at the moment in this up move on the higher time frame. And every time I look at a dip, it just gets snapped up. That's what's happening right now. That's telling me something. That's telling me that there's more interest right now in buying than selling. Yeah, that's what's happening right now. If you look at this the way the price declined, and you see how the price just was snapped up. It was just snapped up. Okay, so for all intents purposes, you've got quite high volume in the selling, and the price isn't really dropping that far. Yeah, if you look at this increase in volume on this green candle, this 12 hourly candle, then you've got quite good selling, sell. And really the price hasn't gone down that far in comparison. So what's happening here is you're getting a lot of absorption. People are absorbing the decline in price. And then what you get is the last descent, the final descent here. I'll show you. And it, for all intents purposes, it looked like a little bit of a breakdown. Someone sold the market here. And the wick filled and the price was just breaking down here. Starts to break down. It started looking weak here at about 9.3, 9.2 cents. Bought back. Again, sold into it like a second attempt for the bears to sell. On KuCoin, it took the liquidity from the lows. Buying tail, rounding bottom. And the price went right back up. Okay, so it's very strong, powerful, bullish price action. Okay, it was brought up to there. It doesn't mean the price can't go back down and range here for a little bit. It can't go back down to test. You can see, you know, the buying has kind of slowed down a little bit, and mainly what I'm seeing right now is that people like to buy the dips. Every time it dips, they buy, especially when you have these kind of crazy fast dips. See, the buying is quite aggressive too. So you get aggressive selling and you get an aggressive buying. But also what you're seeing in the price action is absorption of sales. So I shared this on my Twitter yesterday, and actually let me just bring it up so I can show you what I shared. So it's always, if I see something that's really interesting, I will share it. There. So this was the 1 hour, 2 hourly time frame. You've got higher lows. You've got lower lows on the MACD. That's hidden bullish divergence. And then on the CCI, you've got a ghost, an inverted ghost, which is broken out from the neckline, which is a bullish reversal pattern on the CCI. And I also posted this. This is an extremely bullish candle on the daily candle. It's got a buying tail. It's back into support and you're back in the range. So it's a very bullish candle that was printed. So let me have a look at that candle now. Hold on. Was there anything else I posted? No. So yeah, to a 2-hour time frame. I'll show you it here. High, low, lower, low on the MACD. That's a hidden bullish divergence. That just tells you that the price should be here, but it's not. It's not because you've got buyers that are absorbing the price, okay? And it just readjusts the fair price when you get that, because the price should be down here if it followed the MACD correctly, but it wasn't. It was being absorbed, so now the fair price is slightly higher, and that's what we're saying. We're saying highly every time the price dips, we're getting bullish divergences. So we also had this CCI ghost. You can see it's an inverse ghost. So you got a little arm, a head, a big head, and a right shoulder, and you have a little neckline there. So that's a powerful reversal pattern. We've broken out. This is CCI is a leading indicator, so it's kind of telling you what's to come. You have a breakout, and now the price is following the CCI correctly. Let me just have a look at these slightly higher time frames. You see on the monthly time frame, I indicated last month, I think it was, that you had a zero line reject here on the CCI on the monthly time frame. That's a powerful continuation pattern on the monthly time frame. That's really powerful. When that happened, it was last month, and you see from that month to current price, we're already 114% increase in value. So anyway, so what am I saying? Well, look, I was doing an Elliott wave count yesterday. Elliott waves are really hard. Like, let's not mess around. Yeah, it's extremely subjective, and in a low liquidity environment, it's a lot easier on Bitcoin. But now we're kind of okay. Are we in a wave 5? Is that the wave 5? I'm not sure. I'm not very sure right now, actually. I think maybe I did it correctly before. This 3, I think that was correct. I think this 1 makes sense because it comes back. ABC, that's the 1. Because you come back to it here, to the 4. This is the 5. But I am just thinking to myself, well, is this is this the final wave? The 5 wave? What was the correction and what was this 3? 1, 2, 3, 4, 5. And then what kind of correction is this? Is this an ABC, ABC, ABC? And that's the wave 1. There. This is the wave 5 now. Are we in a wave 5 now? And instead of having just a simple ABC here, we had a little bit more of a complicated correction. So ABC, 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 down to there. And that's basically a WXY combo, like a combination of multiple ABC. That's why it's not easy. Like when I was looking at it yesterday in the stream, I almost felt like we were just doing an ABC and this was the final wave. But now, with this kind of impulsive behavior, I'm thinking maybe now we're in our wave 5. Okay. Now, what I was saying to us yesterday was that this wave 1 was the most impulsive. This 2 was flat correction. This 3 was wasn't as big as the 1, and so therefore I'm not actually expecting the 5 to be bigger than the 3. That wouldn't make sense if this is the last wave, the final wave 5 of 1. So potentially we're back up to the same level, potentially. And then Bitcoin corrects, and then we have to see the correction. Okay. And so what I'm contemplating now is to sell that, but not, I'll only be risking a percentage. That's what I'm thinking. I'm thinking to risk a percentage, maybe 1% of my entire portfolio. And then I'll have an invalidation. I'll be waiting for the invalidation as well, because potentially this is the final wave of wave 1, potentially. So you have to update these. With Elliott waves, you have to see what's happening and you have to update it. This is what I'm looking at. 1, 2, 3, 4, and we're in the 5 now. And we're actually in the 5 of the 5 right now. And the way you can tell is by looking at the impulses. So, oh, I lost that. So wait for it. Let me bring that into there. So now we've put in that low of the 4. Probably that was like an ABC, 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 all the way down to there. You have to take the liquidity from the lows. That's very healthy. And then you have an explosion, which is your last wave 1. We're in an ABC now. And so now that we've put in the 4, let me just check these trend base. So that's the first trend base. That's the second one. So there was alignment there at where it hit there. That's probably why it reacted. That probably coincides with some other fib levels. But let me now do this one here, 2 to 3 to 4. I'm going to try and do it accurately. Maybe I'll just use a slightly higher time frame to get the actual that would be, yeah, potentially there again, and that would complete. It can't be more than the 1-to-1, because you've had a smaller wave 3. If that's the wave 3, then this can't be more than that. And so I'm actually thinking now, and this is where you would hedge. Yeah, if you were to short, you would hedge, because what you're thinking now is this completes your wave 5. But I want to count 5 waves here. Yeah, so we're potentially in the wave 1 now. This is the ABC. I want to see the next wave and then see where the next wave finds resistance, and that's your hedge. And the hedge would be to sell. You'd have to sell some token, and that way if the price declines, you're making more token. That will be your profit. So you're trading, basically. You're trading, and you have to see the reaction. So you wait for the reaction, and actually on a level like this, if we were to come back here to wave 5, get rid of that. Does that coincide with anything else? Let me have a look at my high time frame levels. You've got a daily level up there. Maybe it would be nice to go up into the daily level, to be honest with you. A little push up, that would be nice. Just to clear the liquidity, that would be really nice if that was to happen. Volume levels are lower down. And then you've got your 382, which at the moment you see it's reacted. I want to get us past that 382, and obviously that's quite a far distance to get to the 50%, which is at 17.5 cents. So we had a reaction in the 382. It's holding as resistances now, but I am thinking to myself, if we get like an ABC here for another push up, and then another push up, like a final 2 more pushes up, and that will be the area of interest. And then is there anything else that I had in mind? That's local fib time there. So maybe it's going to coincide with the end of the month. Let's hurry up. Okay. I have an area of interest here where if we complete, if I see this next impulsive wave, then even though I've been telling people don't sell, what I'd be looking to do is risk a percentage to make a percentage, risk a percentage to make a percentage. Yeah. In this situation, because you're culminating at, like, I don't want to risk much, you know, like I'm still like crazy bullish. So all I'll be looking to do, and the thing about TRVL is because you don't really want to catch the price in the middle because it moves too much. You need to catch the price at the extent of the price movement, because if you were to sell, the price is going to move away from you. It's going to slip, and so it makes no sense to push it if you're not at the edges. It would have to be at the edges, and then the idea is that the price declined, you'd be looking, your take profit would be to buy back. Not your take profit isn't to go and take the money into another token, because the idea is incorrect. The idea would be to sell to buy back lower, and that is your profit. The increase in TRVL is your profit. Okay, and therefore you'd be selling at key levels, but then you'd be buying back at key levels too. And we're at the beginning of the bull market, so this could be very good for everyone, especially if we create trade plans. So I'm gonna start doing this as well. Now, the way to do it, I don't know if people have this tool, but you click on it, you can risk 1%, gives you your entry price, and then you have to put in your account size here. So if you put in your account size here, let's say for the sake of argument, your account size is $20,000. That's quite a lot for most people. you risk 1% here, yeah, it tells you how much to sell, you see? So according to this, you'd have to sell 27,000. Hold on. No. God, I can't remember. It's a lot easier with BTC. Trying to do it on TRVL now. Change that to 2%. David, help me out. Oh. It tells you how much to sell. I think here you would sell 19,800 TRVL. And then if it got down to here, you'd be buying back 45,000 TRVL. And that would be your 1%. Is that correct? Let me just change this to 25. Let's just change this for the sake of argument to 1,000. Sell 990 TRVL. But why doesn't that change? David, are you there? Help me out. Am I doing this right? I'm a bit stuck. Let me do it the other way. I haven't done this on TRVL yet, so it's a little bit, I just want to make sure this is right. So go 10,000. Let's just keep it round. Entry price, risk 1%. So if you get stopped out, you'll lose 1%. That's the whole point. You're risking, your account size is $10,000. The 1% should reflect the distance between here and here. So if the price just declines all the way down here and you sell, you're basically becoming a lower seller. That should be 1%. On these figures, David, if I was risking 10, if my account size was 10,000, and this was my trade plan, this is my invalidation, just whatever. How much would I sell TRVL here to buy back down here? you sell that quantity. This quantity here, that's your sell. Yeah. Okay, that makes sense because it changes. So the wider the stop, the less you sell. The tighter the stop, the more you sell, and your risk is always 1%. Okay, so if you have a 10, and it's based on dollars, so effectively here you could lose, wherever this is, you're potentially losing 9,900 TRVL. So if the price, if you were looking to short this, the price came up, swing failured, that's your entry, for example. That's your invalidation. If you had a $10,000 account, you would sell 23,000 TRVL there. Okay. And then if the price comes back up and invalidates your trade, you would have to buy back at market. You'd have to do that manually. And it's probably because it's a relatively low liquid environment, you'd have to scale in. So you might not get the best entry, but at least you're not pushing the price up to get this illiquid wick. That's what you'd have to do. If it was more liquid, if it was derivatives in an exchange which had more liquidity, then you just set a stop market. It would be a market buy at the high, okay? Because your trade is invalidated. So the idea is that you have a $10,000 account here. You create a trade plan like this, okay? Wherever your invalidation is, this will tell you how much to sell, and you're risking 1% of your total account if you're invalidated. But if the price goes all the way down here and you buy back, yeah, you're making 10,000 TRVL. Is that right? So you're risking You're risking 9,900. Nope, that's not right. $16,000. You're risking 9,900 and you're making only 10,000. That makes no sense. You must be risking, you're losing 500 here, whatever this is. Because the tighter the risk, you're still risking 1% in that invalidation. The amount on the bottom is what you'll get. So you'll get this 11,000. This is not going to work on lower time frame because of the illiquid nature of the token. So this is I'm only contemplating this on a higher time frame. Yeah, I'm not thinking lower time frame when I'm thinking about what I'm suggesting, and I am thinking about hedging. Okay, and in a very constructive way where you only risk a small amount and you're looking to, if the price declines, then you're not worried because you're making money. Okay, in a perpetuals market you would short, and now I'm just saying, you know, when you're coming to higher time frame fib levels which are reacting, why wouldn't you hedge? You would, because if the price declines, you'll be increasing your TRVL value, which is ultimately, that's what we all want to do for the duration of the bull market. and actually that will continue pushing the price up, because once you to take profit you have to buy back lower. So effectively we can continue this idea and defend the lows as the price comes down, because we'll be taking profit. So according to this idea, if your account size is $10,000 and you have a wide stop, you would sell 10,000 TRVL here, and you have a 1 to 3 risk to reward ratio if the price came back down to here and you bought back down here. But really, if you're risking 1% here, then all you really need to do is buy back for the same distance to make 1%, and the rest is a runner. That's effectively what you need to do to make that trade work. But these are slightly higher time frame trades that are coming into pivots. So let me just work this out. So David, tell me, so if you had a wide stop like this, how much would you sell 10,172 TRVL? How much would you lose? How much TRVL would you lose in this trade if the price went up? If the price did that. David is very slow today. He's not really responding. All right. Going to Bitcoin is a lot easier. Account size 10,000. Don't worry, David, you're busy. That's your invalidation there. Let's say that's your entry. That's your target. You're risking 1% of that, which is basically $100. So you're losing $100 in that drop. See? So you're going from 10,000 to $9,900. So you're losing $100 in that drop. And in that increase, it's a 1 to 3. So you should be making $300. See, look, amount $10,300 in the increase. So if you get invalidated and you enter there, you lose $100. If you go up, you're making $300. That's a 1 to 3. And then it tells you how much Bitcoin you need to buy to create this risk to reward ratio based on a $10,000 account. Okay, so you see this quantity of Bitcoin. Will change depending on how wide your invalidation is. So if you have a tight invalidation, if that's your stop loss, then it's saying here to risk $100, you have to buy 0.353 Bitcoin, and you're risking only $100. And then once you take profit at the high here, you could make your $300 or whatever the risk to reward. This is actually a 1 to 9. Now it becomes a 1 to 9. So if you were to risk $100 here, you're actually making $900. It tells you how much money you're making at the end. Okay, so if you take that idea to what I was saying on TRVL, now it's, see, on Bitcoin it's easier. So let me just do it with the buy side first. And so what I'm saying is, what you would do is, let's say you were to buy here. This is your invalidation all the way down to that low. And you're targeting, you're doing a 1 to 2 trade. Okay. You're risking, if your account size is $10,000, if the price, if you enter here, you go all the way down, you lose $100. Okay, so let's say you were to buy here. As soon as you're invalidated, you're basically selling at market. That's what's happening. Okay, that's literally what's happening. And what this is telling you is you have to buy 6,489 TRVL No, it isn't. It's saying you start with 6,489, you end up with 10,119. That's what it's telling you. Because that's a 31% increase in value just to get up to there. Okay, so you're buying 6,489 TRVL here, and you're exiting at 10,199. Or is that in dollars? No, that's in dollars. Okay, let me just figure this out again. It's a little bit more tricky in TRVL. All right, my bad. So the amount here and there is in dollars. So the loss here is in TRVL. So here you're buying 8,271 TRVL. And if you get stopped out, you lose 1,209. And if you hit your target, you're gaining 3,081. And that'll be a 1 to 2 trade on TRVL. I don't know if that made any sense. It's I'll tell you something, it's not entirely straightforward. So I think I figured it out. If you have a $10,000 account here, to risk 1%, you lose $100 if you get stopped out. Okay, so depending on how wide your invalidation is will depend on how much reward you get at the bottom. Okay, so if you have a really tight validation, depending on a wide invalid, it's telling you how much TRVL you should sell. Okay, so the quantity here is the amount of TRVL you should sell depending on the invalidation. So for the sake of argument, let's say the price now does an ABC here, whatever, and starts to move 1, 2, 3. Then you have a little rejection here, and you enter, and that's your invalidation. You have an invalidation. You see a reaction, area of interest, a wick, price closes underneath. Now you have a trade plan. And you're looking to target maybe the top of this, because you're thinking to yourself, that's the wave 3, this is the wave 4, and then you'd have a 1 to 2 risk to reward trade potentially. On a $10,000 account, you risk $100. You could gain $200 in that trade, and this tells you to sell 21,505 TRVL to make this trade work. You'd have to buy back when you hit your target. Okay, and each time you win a trade, your TRVL account size increases, and you're only risking 1% in each trade. Okay, but you have to do this correctly. You need an invalidation. You put in your account size here in dollar value, and then wherever you enter, you have your invalidation, and if the price manages to get down to here on a $10,000 account, you're making $200, but in TRVL value, in TRVL, because you're buying back. And if it comes down here and you enter, you sell, then the price comes back up, you end up market buying higher, you're losing $100. You're losing 1%. So you're basically risking 1% of your account size to make 2% in this trade. Does that make sense? And so if you are to take these kinds of trades at areas of interest with TRVL, you can't short, so you're looking to sell. I think everyone should think about it, what they're going to do, whether they want to do this, but you got to have a trade plan. And so what I'm going to be doing now is I'm going to be creating trade plans, and I'll be looking to take the trades based on the reaction, and I'll be looking to risk. Maybe what I will be thinking about doing is starting off with 0.25% and then laddering in. So, and if I get invalidated, I'll market buy. And I'm not really looking to do this to buy. I'm only looking to do this to sell, because as we start going up, and this is the point, as we start going up, it's going to be very possible that we go up quite fast and we get into higher prices. And so if you go up quite fast into areas of interest, create a trade plan, and it could be quite, if you have a small invalidation, it could be quite good, because if we head right back down to that level and you have a small invalidation, it tells you on a $10,000 account, you could make $1,000 just by that trade plan. You're risking $100, and if it comes all the way back down to there, you can make $1,000 just like that. You can increase your account size by 10%, and you're only risking 1%. And all you have to do is, at the right place, you have to sell 13,262 TRVL, okay, at the right place. So the only way you would do it is at the right place. And then obviously, if the price then suddenly goes back up, you have to buy back at market, and that would be the trade. You'd have to do that, and then you'd be stopped out of the trade, and that's a trade plan. Okay, so I'm going to start doing that right now. Not right now this second, but like as we approach higher prices. And fundamentally, the reason why is because of the volatile nature of the market, and the higher we go, the more volatile it could become. And the only way to protect yourself is to hedge by shorting. That's the only way to do it. Effectively, that means selling, okay? But not with the view of selling to exit. It's with the view of selling to buy back TRVL lower. And so even if the price declines, I'm not going to be worried. So I'm not going to be like looking to exit. I'm not looking to exit until next year, okay? And that's only going to be in alt season. But in the meantime, I'm not just going to be looking to hodl and hope for the best. I'm also going to be looking to trade this and try and increase my TRVL value. So we're having a little bit of a pullback here. Why are we having a little bit of a pullback? Because I think David was saying Bitcoin is trying to go up. David is saying that if you can perfect that trading method on TRVL, it'll be helpful. Well, I think the idea is that we're developing a little bit of an interest in TRVL, yeah, and I don't think it's a good idea to randomly buy and sell. But what I've noticed is that at really important areas, we're getting reactions to the price, and rather than just do nothing, now that we're above 9 cents, or now that we looks like we're trying to hold 9 cents for continuation, then there's no reason why people don't trade this. And you know, there is a trade plan now, to be honest with you. There is a trade plan. Like, look, we're into the 382. There's a long and a short trade plan right now, just because of the way these candles are formed. Okay, the short was already happened when we created a swing failure of the previous day high with a red candle into a higher time frame fib level like that. Yeah, you had a short. It was basically, that's your invalidation, and potentially that's your target, and you make your 1%, and you're taking profit basically. So you, in this situation with a $10,000 account, you would sell 5,617 TRVL. Now, you may not make money on this trade, but you might get break even. It would be a hedge, because if suddenly the price didn't get bought back and it just went down, then even if the price is going down, you're making money because you've sold at the right place with a view to buy and back lower down, so your TRVL value goes up. You have to buy back. That's how you take profit, in the sense that your base account is still TRVL. There's also a long trade here. And the reason why there's a short and long trade here is because of the way these wicks have been put in. So do you see, this is a really powerful daily candle with a buying tail. Okay, so you don't want to see now the price to fall back underneath this wick and close underneath that wick. That wouldn't look healthy. That would look weak. And for all intents purposes, this green candle could be considered weak because it's a green hammer into resistance. Okay, but we are back in the range, and we're just coming back to test lower levels, and so this daily level is still holding. So as long as support levels hold, what you don't want to happen now is for the price to fall back down and close underneath that wick. So that's your invalidation. So for a long, if you were to long now, then literally that's your invalidation. That's your long. Based on that candle, that's your invalidation, and that's your target. You're not expecting now the price to go down. Based on this formation of candles, you're expecting the price to go up. And so based on a $10 account, $10,000 account, you would buy which would you buy? That makes no sense. Yeah, you're risking $100, so you'd buy 6,242 TRVL, and you'd be walking away with 7,559 TRVL. That increase in value is, you're risking $100 and you're walking away with $10,471. But that's the reverse. You're buying TRVL to sell back into USDT. I'm not thinking long, I'm thinking short. So the idea is that as the price goes up, you're creating a short plan. Let's say you're looking to short 17.5. Okay. Based on your invalidation, you'd go into this tool and you type in your account value. Let's say for the sake of argument, it's $25,000. Based on that invalidation, if you get a rejection into a higher level like that, excuse me, you'd be looking to sell, depending on the invalidation, you'd be looking to sell 20,000 TRVL. Okay. And buy it back lower. And your profit, you could lose in this trade. Let me see what the risk is. 1%, $25,000 account. So you could lose $250 in that type of trade. And then here you'd be making, it's a 1 to 5 risk to reward. You'll be making 5x on $250. So it tells you there. So your account size will begin at 25,000 and it will end up at 26,390. And then all you have to do is just follow the numbers, and you don't have to think about it too much. You just have to say, okay, if I sell 20,000 TRVL here based on my account size of $10,000, or sorry, $25,000 at this price, then I can sell 20,000 TRVL with a view to buying back. And so what I usually do when I'm trading on Bitcoin is, as the price moves 1% in my direction, I will take most of my profit. But with TRVL, it's going to be slightly different because we're going to get a little bit more volatile moves, especially when we get the price come into layer, like look, you see how the price came up into these areas of interest and it rejected, and so you got quite good moves. So I didn't do this because I said I wasn't going to trade it underneath 9 cents, but based on this candle up to there, down to the area of interest, which was $5, $5.50, that's a 1-to-1 trade. It's quite a wide invalidation. Okay, it's quite a wide invalidation, and so potentially you would try and hone in the invalidation. Maybe when you look at the candles, you think to yourself, well, look at that hammer with a wick underneath it. You don't expect the price to come back above it. Yeah, that would be your invalidation. And so therefore you actually, what you look with a $25,000 account, you risk $250 in that, in this kind of invalidation after you see a rejection, and you're basically selling 40,000 TRVL with a risk to reward ratio of 4.5. So you risk $250 and you're making above $1,000 just in that trade. Okay, and then you could probably take profit as you hit your 1%. And there's lots of trades that I see on TO, and I haven't really talked about it because I never really was like looking for people to trade. I want people to just hodl and accumulate. But now that we start getting into higher prices, I'll be looking to create trade plans, which I will be taking, and I'm only going to be risking 1%. And I think the higher we go, the more likely I'll be to, and the higher the time frame, and the more significant the resistance, I may risk a little bit more as a hedge. Okay, now some people might have a different idea about how to do it. They might be like, well, I just want to just exit 50% of my portfolio and be done with it at certain levels. Look, I'm not telling people what to do. I'm just telling people what I'm thinking of doing. Anyway, looking at the price action, I think it's really powerful and I think it's really bullish. I think we have to hold here and we have to push up. We have to get above this 382. I think that's going to be a really important level for us to breach. And also, I think what we have to do the next consolidation, so whatever this wave 5 looks like, let's just say for the sake of argument, we do get into a wave 5 and we end somewhere here at, who knows how far it's going to get, but I don't think it's going to get further than the 3. So let's just say we get above there. Now the correction is going to be important because I think we want a shallower correction as possible, and that's going to depend on Bitcoin. Okay, it depends on what Bitcoin does. Do we suddenly see a deep correction or not, or do we see a shallow correction? I think for the sake of the token going up higher prices, what you really want to do is hold and backtest and hold this 382 for a flat correction up here, or some kind of extended flat. Okay, but no one can predict the price and no one knows what's going to happen, and there's no reason why you don't see another sell-off, except that as we start claiming levels and backtesting them, then people are more inclined to pick up the price at those levels. So right now we've created a really nice wick on this daily time frame. I'm not quite sure that I want to see us lose the bottom of that wick. Yeah, so I think that would be a very important level. I'm going to call it the daily wick. And I think the other level that's important is that wick there, and then daily wick, right? And probably what's going to happen is that's going to be our range, probably, for the foreseeable future. Let me see how that lines up with the volume area. There's not much volume at the moment. It's quite light. Yeah. So let's see. I think it's probably likely that we range for a little bit and then see what happens. And then I'm like with the Elliott waves, I'm not 100%. So I have this idea in my head that we are doing that. That was quite impulsive. That was corrective. That was quite impulsive. Are we going to see more of a prolonged correction here for a 5? Or is this whole thing a correction? That's the other thing. So I'm not sure. So the other thing that I was thinking is that was quite impulsive. That A, B, C, was that, you know, is this kind of like just a correction? This whole thing from there to there to there. Are we seeing like a little bit of a long correction here for the actual wave? I can't really. I think this is probably the 5. And then the other thing is, I mean, it's the 5. If that's the 5, is that it? That's the other thing. Just because I think maybe up there is the best resistance. Was that it? That's a good question, right? So even on a shorter time frame, like I'm thinking if that was it, obviously the best short was there, but if we were to lose this level here, I mean, again, there's a short trade plan in play. This is on a local time frame, and it's hard to do it with large amounts of TRVL within a liquid environment. but basically on a small size account, let's say you have a $10,000 account, you'd be selling 18,518 TRVL. You're risking $100 and you can make $200 in that trade idea. Yeah. Just based on a $10,000 account. If that's your trading account on TRVL, you don't have to do your whole portfolio on a local time frame. But you see, if that was to happen, that would be a viable trade. If you lost it and went down there, then you could trade that. Okay. Now I'm not going to do that because I'm thinking higher. Okay. Don't know if anyone is here. I'm bored, everyone. Right. I'll be right back. Sorry, I'm back. David says, I'm here, just make plans, no trade travel, big levels, increase channel, same account. Just make the plans and I'll trade TRVL at the big levels just to increase TRVL amount the same account. I think it might be hard to get filled on big trades, so we'll have to scale in. I think it's a good idea to scale in and build a position at the areas of interest. So right now, I think for me, I'm looking at this area right now, the previous high here. And also the other thing that interests me is this, is this exhaustion level here, which is slightly lower. Okay. And this is on the 1 hour time frame. But if you look on the daily time frame, you have a at the high, you have a daily exhaustion level. You see that? So especially with the confluence of fib extensions, you have a bunch of confluence there on fib extensions, and potentially you're looking at, if that was the wave 1, this is an ABC, we're looking for another wave and another wave. And so then the question is, what kind of correction we're going to get? And do we get like an extended flat correction, or do we get a deep correction? Well, right now what I'm seeing is that the dips are getting bought up. And then this whole correction, unless we're still in a correction, and that's the other thing. And so the other thing I was thinking is maybe this whole thing is a correction. Maybe that was the expansion, the first wave. ABC, that was your wave 3, that was your wave 1. But this looks like 5 waves, 1, 2, 3, 4, 5. And then this comes back to back test the top, which is there, which is here. There's volume coming in this push up. That's quite impulsive. And you just want one more wave into there. And then maybe what you want to see is a flat correction. If we go there, then you want to see a flat correction here. Maybe that would be what you want to see. Consolidation underneath resistance. Do we hold the 9-cent mark as we come back down? I think that's my preferred scenario would be this. And then where's 9 cents? Somewhere down here, and then you start correcting. And it's just a low volume correction. And I think that's going to depend on Bitcoin, actually. That's the thing. And so I don't know if we're going to get a flat correction, because I've never seen a really flat correction on TRVL. It moves up quite a lot when the price ascends or descends. You've got yeah, I don't like trading these like small ranges. I prefer higher time frame. I don't really want to see us I want to see us just push up actually. And so is it possible that that was our wave one and none of this was actually correct? We're in the wave one now. I don't like to see red candles in impulsive waves. I think they should be more impulsive. Yeah. And when I'm thinking about impulse, I'm thinking about this because it is within the remit of TRVL to put in 1, 2, 3, 4, 5, 6 green days in a row. And also lots of red days in a row, impulsive selling. So that was the biggest, that was the impulse that I've seen in the past. And potentially that was impulsive too, with a couple of red days there. I'm not crazy about this impulse at all, even though I'm counting waves. I'm not fond of it. I'm not fond of the way it's impulsing. Could that be our first wave? And the rest is just rubbish. Now we're just in a correction. Could that be the first impulse? A little bit of an inverse head and shoulders here as well, look. Lots of volume, decreasing volume here. It makes me think that this is corrective when you have a decreased volume like that. It makes me think this whole thing is corrective. Unless this was our one and what I did before wasn't relevant. This one here. 1, 2, maybe this was irrelevant. I liked it because we came back into it here. But maybe all of this is irrelevant, and that's actually when we began our wave one. Okay. And if that's the case, what would that mean? If this is not correct, if that's not the wave 5 and we are in the wave 3 now, this was the wave 1. Could that be the wave 1? 1, 2, 3, 4, 5. How did I do it before? 1, 2. If that was the 1, 2, this is the 3. How would you know? How would you know if this was the 1 and we're in the 3? Well, if for some reason this 5 is bigger than this 3, then that changes everything. Because no, it doesn't. Wait a minute. This 5 actually can be bigger. Wait. Let me just have a look at this again. No, that's fine. It's because the 3, this 5 can be bigger. Why was I thinking it's shorter? Oh, because of the local wave. The local. Because you have a 1 there which is shorter. 1, then shorter, and then shorter. But according to the higher time frame, this 5 can be bigger. It can go up there. Which is what I was thinking before. It's just the way that we've come out of this, impulsed out of this 4. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. See? 3, 4, 5. Then it would be that. We just can't lose this low here. That would be really, that wouldn't look good at all. At all. After we've made this this powerful reversal pattern, losing that low wouldn't be good. And we're coming to test now. I don't think it's a good idea to lose that low. And the problem is, before you know it, that you've lost your low, you're already down 14%. But if you lose that low, that's not going to look good. It's going to actually look like some kind of broken head and shoulders pattern. Yeah, I'm not thinking down at the moment. I just see a lot of strength. I'm looking at the daily candles. Yeah. We're holding support. In this upper range with decreasing volume. The 3-day candle, look where it closed. The whole thing reversed. It's just coming back now to find a little bit of support. And so it's just taking a little bit of time to get through this level. So for all intents purposes, that wasn't the impulse either. And it's just corrective too. We're still correcting. The whole thing could be a correction. And one thing I noticed is that the market structure on the local time frame did change. And then we've just put in a higher high here. So we're just looking for a higher low to go back up right now. That's what it looks like. Um, all right, I'm gonna go and have some lunch. Oh, that's interesting. Look at this BTC GAN fan that I've got on TRVL against BTC. How did I draw that? Can't remember. Oh, to that, look. We're into that. Get rid of these fixed ranges. There we go. So look at where we are against BTC. We're trying to flip this 3-1 into support. And crazy how the whole thing ranges. Look, you see how every time it went down, it just bounced, up, bounce, down, bounce. Now we're into the upper part. We've tested that upper GAN line a few times against BTC. Once maybe we've pushed through it, and now we're just trying to hold it as support. So that's not bad actually, because if we can hold that as support and get to the next one, and then the next one, and then we can fly. And really that's what I'm contemplating. We go up, and then we go up, and then we just go up. I'm actually thinking, that's what I'm actually thinking now. I'm actually thinking that with TRVL, our price adjustment is up. I'm not thinking down at all. All right, see you, David. See you later. Thanks for joining me. I'm actually thinking up. I'm thinking we go up and up, push into the golden pocket, and then potentially that will be a good place to hedge. Right. I'm gonna end my stream now. Thanks for joining me, and I'll see